Little update for you guys because markets are in flux. The regime we're in is a little undefined. And so wanted to give you guys a quick US dollar correlation snapshot update. All those fun words. Everyone loves tracking correlations, especially if you don't track US dollar as closely as someone like myself does. Tying it to what other asset classes are doing can spur some interesting trade ideas or potential trade strategies. So first I want to hop into cross-asset correlations on the next slide. So here we've got a little more of a familiar story here. I've tracked major U.S. dollar pairs against S&P, gold, crude oil, 10-year treasuries, and copper, because that's had perhaps some more interesting price action than just gold straight up as a functional metal there. And we've got 3-month correlation of prices here. And this, to me, it's classic relationships. We've got your 10-year treasuries moving with dollar-yen primarily. We've typically seen that very consistently be the pair that reflects interest rate sensitivity the most. We've got Australian dollar, your exposure to gold and copper, those commodities, those metals, as well as S&P 500. That's the top of the board there in terms of risk-on correlation, risk-off, kind of sentiment-driven. But then we've got an interesting wrinkle here with crude oil and U.S. dollar as of late. Crude oil and U.S. dollar, a positive correlation right now with the highest impact in or similarities between euro dollar and dollar yen. I did a little bit of digging on this. Can't really get too much of a story. Might be more of a range-bound coincidence, if anything. I mean, we've had general bearish price action in crude oil over a longer-term horizon. A little bit of a bounce back as that's traded in kind of a range. U.S. dollar now flipping a little bit positive compared to recent months. Do you guys have any additional color on that? I think it's more of a coincidence than anything. U.S. crude production is at an all-time high, but crude oil typically just more of a supply and demand of its own. You have the historic kind of anecdotal inverse relationship with crude priced in U.S. dollars, but is that worth reading into from your guys' perspective, closer to crude perhaps?
It's an interesting question. We had Thomas on yesterday. We were talking about crude floors in terms of a break-even price, and it's around 60, and it's gone below that. But at the same time, I don't think there's anything that's too. I wouldn't hang my hat on something to just go nuts with the trade there. But.
Agree. I can definitely agree with that. I wouldn't hang my hat on it. It's sometimes these correlations flip every now and again when there's political stuff or whatever it may be. And I think this is just a result of the current environment. I think, obviously the dollar has been suffering as a result of global trade potential between us and China. And in a way, crude oil has been kind of suffering from that too. So I think that's why it's happening right now. I wouldn't formulate, this is the thing. When I learned trading, I also traded alongside some traders who traded big, and they would see something like that, and they would formulate this real deep thesis and create a trade around it. And so that's why I'm saying that from that standpoint. There's people I know who used to do that, and that's just a lot. You don't need to do that, but a lot of people figure that out. I just think it's cool to be able to see that, and the reason why it's probably happening right now, but I don't know if it's something that's going to last long enough for you to formulate a trade.
Agreed. If we flip back to the slides here, switching over to FX correlations, this is a much more interesting picture to me. We have just dollar pairs here, didn't go into the currency crosses, but what this tells me, we have some pretty extreme correlations among dollar pairs, which screams to me that even though we don't have U.S. data, even though the government's in a shutdown, all of this U.S. dollar price action by pair is primarily being driven by U.S. specific factors. I call out the correlation between euro dollar and dollar Swiss franc, negative 0.91. That's the top of its historical range since they depegged from each other, and that negative correlation just a function of the U.S. dollar being on the bottom half of one pair and the top of the other. So in essence, the euro and the franc moving very much in tandem, which you wouldn't necessarily expect given how much demand has been attributed to the Swiss franc from a kind of safe haven appeal. But yeah, there's no really euro-specific news that's driving that. You get a little more with British pound dollar because we've had some recent Bank of England commentary, a little more speculation on their rate cutting path. But this just screams to me that no matter what dollar pair you're trading, you have a lot of dollar exposure primarily. And then you look at your current trade there, Mike, with dollar CAD, and that one of the ones that isn't as correlated to the others. You're seeing around a 0.6, 0.7 correlation to other US dollar pairs, where it's more towards 0.8, 0.9 in a lot of those other pairs. So all this says to me is keep monitoring US dollar exposure. If you do have multiple pairs across positions across US dollar pairs, it might be driven primarily because of dollar factors above all else. And then lastly, wanted to cover what might be top of mind for everyone is just the relationship between U.S. equities and U.S. dollar. On the last slide, please. Plotted the rolling correlation of U.S. dollar and equities, and traditionally we see this be a negative correlation when stocks move higher, a U.S. dollar moves lower, and vice versa as a function of risk sentiment, wanting more exposure to greater returns in the stock market, or a safer play with just holding U.S. dollar, U.S. assets, perhaps treasuries. But here we're getting some flip back and forth throughout 2025. The main storyline through the spring and the summer was kind of this greater U.S. asset risk, where we saw U.S. equities and U.S. dollar move in tandem with just some of the administration exposure, global perception of how some of those policies or growth perspectives would change. And we've seen that kind of erase now as U.S. equities continue to churn higher and U.S. dollar kind of stutters. And so this calls out to me that we don't have a clear answer of how this relationship will play out over the medium term, and that could potentially be a catalyst for some trade ideas once that is established. We're kind of in no man's land right now, as we've speculated when looking across asset classes, and this relationship is definitely one of them. So, I mean, today alone we've seen U.S. equities rip higher, dollar suffer, U.S. equities pull back a little bit, and U.S. dollar not necessarily getting that bid. So I think there is still a little bit of that overall U.S. asset nature at play, but we could be closer if this trend reconfirms to a more historic relationship where you have this stronger inverse relationship. That's what I got for you on a little update there for how the U.S. dollar is moving as it affects or pertains to other asset classes.